Hello and welcome. Today is that of Friday, the 16th day of December 2016. Welcome. Yesterday's session down 5.21%, which worked out to be the 178th worst declining day since 1968. Later in this video, I'm going to talk about today's high and how it moved, as well different things like why you could explain a large two-thirds decline, and well, I guess now is later. So let's take a look at today's levels. 3:56 in the morning, New York time, a little under $16, 14-hour lows. Then 4:33 or 37 minutes later, up to 16.32. Nice uptick of 2% at a very odd time, making then 22-hour highs. 4 minutes later, giving back half of its gains, or 1% decline. And that was a telltale sign that today wasn't going to be much of an update, as the case it wasn't. 19.4 million minutes before then, silver was 49 bucks, as was the case 3 million minutes ago. 19.4 million minutes ago, I was 5 years old as well. Here's a couple reasons why an item could lose two-thirds of its value. We're going to use silver in this case over a 5-year period. Number one, supply and cost is high and low, meaning it is cheap to make the product, and therefore it's, with good demand, able to drive lower prices, especially with competition. Now, of course, that's not the case with silver. Then you got sellers of more, which is sort of the case because the sellers would be in the paper market, as they call it. But that's where you have a very high ratio of sellers over buyers. Hard to sell and not get the short end of the stick, which makes the market lower prices over time. You have people wanting to sell, but hardly anyone wants to buy. It's a difficult task. Dealers will be panicking to lower inventories by large quantities. And then the mints would also be making a lot less. So you have like an 85% decline maybe from 5 years before, or whenever the price was 49. Obviously, again, that was not the case. You have a lot of large moves, big moves. This is silver in 1979. This was its yearly chart. So 17 bucks first came into play here. And that was September of such. So we can see a fast move breaking resistance of about 10 up to about, again, 18. And this is when the year started at 5 and change, already up to 10, the big move, and then this big resistance breakout. Ended the year at 32, got up to 50. So, major moves are going to take place in its time. It's pretty much a guarantee. So I'm talking about all these lower highs. All it takes is one major move to break that trend. But there's been several lower highs in a row, and the next one's got to be favored to occur. But where? Right now, the low is in here, barely below 16. So if it gets a bounce from here, where would it go? You'd probably need at least a bounce to this point. That would be a lower high. And that's probably where it would go. It'd be very difficult even to test the 17 handle, with 16 3/4 being the most realistic places. And if we continue down, well, then this is no longer the lower low at 16. It will be wherever it is. And now you're going to start to talk about these lower highs then reducing with its movement. If it goes down to 15 1/4, then you're going to be talking about 16 maybe being the lower high. So you're needing to look at this to, one of the trends it needs to do is make a higher high, and of course follow that up with a higher low. That is one of the few early stages you're looking for within this market reversal trend. Because we look at this on the weekly time frame, with this Fibonacci point in here, which was support, it encountered this few moves in here, and then now just breaking below, barely. So it's at that level, so the chances of it holding isn't as good, but realistically, it's more likely, again, to find a lower high, take it out on this level to be a resistance area mark. Just like we need the daily chart, you need to make these higher highs come into play, which would be required to then flatten out this 18 average, one of the next steps to end this bear market and move it into neutrality, because as long as it's below this 18 average band, it's bearish. If it's within the band, it's going to move towards neutrality, and if it breaks above it, it's going to attempt to move it into a bull market. So that will be it for today's video, and I will talk to you later on. Bye-bye.